If you look at our growth forecasts, 2.2%, it's weak for global growth. And it comes down from a weakish global growth rate of 2.6%. And 2023 was also characterized with a lot of divergence in growth. US, super strong. It was all about the consumer and consumer consumption remained strong. Europe weak, Germany going into recession, China also having its own difficulties with real estate. For next year, we forecast in the advanced economies actually the weakest growth rate since 1980s, outside of recessions like the one we had with the global financial crisis or the one we had with COVID-19. Hence, in our perspective, risks are clearly on the rise. It's a challenging environment, and growth slowdown is a reality.
We know credit costs have taken the steam out of the growth story, but where would we be without the fiscal stimulus? Because one of the arguments is that it's been inflationary and it hasn't helped the case. But if you think about the growth slowdown, without that long-term trajectory of fiscal stimulus that is around large-scale infrastructure projects, what would the growth profile be looking like in the next couple of years?
If you didn't have a fiscal stimulus or monetary stimulus, there's no question we would have had a much stronger economic slowdown during COVID-19. And flip side is we would have had also less of an inflation surge. But we still would have had the inflation surge. We shouldn't forget, before going into COVID-19, the world economy, advanced economies, they were not in good shape either, and we had an inflation shock already.
Yeah, and one could construct a cynical argument that the inflation shock has actually worked out quite nicely for the insurance sector, i.e. getting premiums up and actually taking some of the capital that was flooding the insurance market, taking it out and putting it back on deposit elsewhere.
I wouldn't go so far at all, no.
Really?
I think the inflation shock, it leads to a cost of living crisis.
Sure.
It's really a bad thing. It's to have sustainability, to have inflation so much above price targets.
Sure.
It's not good for society, and it's also, in fact, not good for insurance companies, for claims, because claims costs, they go up with inflation.
That's another point, actually, I was going to raise as well. And look, again, I'll carry on in my cynical vein if I can as well. The industry has used calamity. No, it hasn't used calamity for it. When calamities happen, when hurricanes happen, when terrible weather events happen, when wars happen as well, the industry takes a hit. We see that far too often, unfortunately. But the industry is very, very good over a cycle of getting its money back, and then more so by increasing premiums as well. So given that as well, this report is quite worrying. Insurance reports looking forward are always worrying. There's a whole host of factors that the insurance industry wants us to go and get insured over and wants us to be concerned about as well. One who's a cynic might say it's quite self-serving for the industry to get us worried about a whole host of things so that we can buy more product and keep the premiums higher.
No, I wouldn't agree at all.
I didn't think you would.
No, first of all, there are various factors. The inflation shock, I think it's not good for anyone, including insurance companies, because you have the claims inflation.
No, it didn't take. Jerome, it didn't take the money out of the industry and put it back on deposit elsewhere because.
No, it didn't. Because no, inflation shock, it's at the end of the day, higher claims.
Zero interest rates was a disaster for the
insurance. That was
insurance.
a disaster.
So having higher interest rates has been great for the industry.
That is a blessing. But we shouldn't forget, just because we had 15 years of low to negative rates, that this was something normal. It wasn't. And now we are getting back, I would say, to normality. And I think that's a big blessing. And that's a big silver lining, I view. And that's also in our report over the next 2 years. For the insurance industry, for long-term investors, for the pension fund, finally risk-free rates are not return-free. And that's good for everyone.